Hey guys, it's Simon with Trade and Perform Coaching, doing the trade review for Thursday, the 20th of April. And man, it was a freaking rocket ship of a day. I think that's safe to say. Let's get the legalese out of the way first before we get started. Let's see here. Here we go. Legal notices. Okay, the fun part. Important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only, and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in futures and options markets. Absolutely do not trade money you cannot afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. The past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, we got the fun part over with. Let's get to the interesting part. So, first of all, my job as a trading coach is to make you a better trader, right? And I also, the fun part of this is I also get to comment on what other people say and do, right? And so one of the things that I saw all over StockTwits last night, right? You see like 60 million different opinions. Everyone is a professional on StockTwits, right? And Twitter. Nothing wrong with that, right? The flow of information has been good. But you have a lot of people talking about things that they just don't absolutely know anything about. And if you saw the video I posted last night, the first thing, I posted out a couple of things, but the most, I'd say relative to today, the most important thing that I pointed out was I pulled up, if you'll look in that video that's posted on YouTube, I'd appreciate the likes, by the way, if you can do that on YouTube. And I want to remove this. And I said, hey guys, take a look. We may have closed on the low of the day, but we haven't closed below the prior day's low. We're yet to test this high volume node on a 24-hour basis. I don't know why I can't get this to draw. There we go. Right? And we're yet to break or even retest the what I call the Obamacare Survives 2018-2020 low, right? That all adds up to it's not bearish, right? Not only that, but now look at the flip side. Day after day of higher highs, right? So when you go and read, so you've got to think for yourself as a trader, right? Not what I think, not what someone else thinks, not what FT71 thinks, not what anyone else thinks. You've got to think for yourself, right? That's the point of coaching. That's the point of learning how to trade. And you got to look and go, higher highs and higher lows are usually bearish, and that changed. Right, we changed that right over here, right after we hit this low over here. We've been going up since then. And even though we got to close on the low, right, you got to remember two things. It's options expiration week. That causes really weird moves in the first half hour of the market on Thursday and Friday, and the last hour, particularly on Friday. So this is a heads up for tomorrow. The last hour on Friday can be a beast in either direction. I will be standing aside. So lastly, my job when I'm coming to work, right, I do the analysis on the whole market, but my job is to be a sniper, right? I want to pick people off. I want to put as little of my capital at actual true risk as possible. So let me separate that statement for a second, right? Anytime I put on a trade, I have capital risk. That risk is usually, but not necessarily, right, limited to the stop loss I put into the market. There are events that can cause that stop loss to get run, but it's safe to say that 99.9% of the time, my stop loss gets hit, and certainly within a tick or two if it gets hit. But what I am looking to do is read a combination of the larger market and then bring that to a very, very tiny view through my, if you picture a sniper scope, right? And I go, I'm looking for these things. Now that's important because we are dealing with an unlimited environment. Everything looks good. And when you pull a chart up, right? When you pull a chart up like this, at the end of the day, it's of course very easy to look and go, well, heck, I just would have gone long here and sold here, right? Well, why wouldn't you, right? The problem is that when you can't, you've got to be able to read what the market's doing step by step. So let's go through, right? So first, as everyone knows, I believe religiously in my checklist. Okay, so look, whether you're doing this in your head or not, I've heard all kinds of excuses for people not doing checklists, okay? Making money does not require you to be smart. I've seen a lot of really smart people lose a whole lot of money in the market. As far as I'm concerned, everyone needs a checklist to remind themselves what they're looking at. So first of all, this is the post-open checklist. Let's go ahead and get the pre-open checklist first. Pre-market checklist. There we go. So the first thing I'm looking at, what's the overnight range in points, right? So that was easy enough to answer. I can pull up my, go grab the right screen. You know, I used to always get so nervous when I couldn't get the right screen going at the right time. So let's look at the 15-minute chart, right? And this was Asia low, right here. That was the open, 23.32. This is the U.S. Open right here at 8:30, and that high was 23.42. And I can tell you, if you go back and look at the last couple of nights, the overnight range has been about 10 points. Why is that important? I want to know if the range has been expanding or contracting to look for a change in character, right? Number two thing on my list, right, and I go right down through this. Are we opening above, below, or inside prior day's range, right? So opening above or below increases the odds of an open drive higher. Now we didn't open above or below, but clearly by the time we got here, this was, pay no attention to this without an explanation, it makes no sense. This was the prior day's close. We're opening approximately 8 to 10 points above right out of the gate, right? So what does that tell me? Stop and think about that. That means that overnight, first of all, we were never able to trade underneath the low. It's not like we traded underneath and came back up. Pretty much as soon as we closed, buyers took back control. We had a quiet Asian session, right, which is pretty normal. And then as soon as Europe opened up, they decided, haha, Americans were wrong for whatever reason, and we are buying, and we consolidated sideways through there. So the next thing that told me was I needed to get below London low, and that was approximately right here. And you'll see we never traded below London low. So I have three critical pieces of information. We had a 10-point overnight range. We didn't trade below yesterday's low in Asia or in London, right? And we were trading above Asia's low, and we were trading above London's low. Guess what, folks? Immediately, buyers are in overall control, is what this tells me. Again, I don't have to remember to think all this through. It's in my list as I'm going through the day, right? Or as I'm going through the morning. Next, and I know this is taking a long time, but this is the difference that separates successful traders from non-successful traders, right? So next, is the market trading out of London higher in particular, right? Trend up, it was. We identified that, right? We're inside the range, but well off the prior day's lows. That was a good sign. Is it a Fed day or non-farm payrolls? It wasn't, but it is OpEx, and usually on Thursday and Friday, the first half hour and the last hour can get pretty volatile. It's worth noting, right? What was the prior day's first hour range? Well, that was pretty easy to go look at, right? We can come back and look, and we can see that the first hour range was 45 to about 49, 4 points. Today's first hour, excuse me, that was the first hour. This is first half hour. The first half hour here was approximately 42 down to 37, 5 points. What's that telling me? Think about it. Go through there, guys. It's 5 points. It means we're in a normal market. Nothing crazy is happening. No one's panicked, right? So remember, you had all these bears. Oh, the market's going lower. We're going to test 23.18. We're going to test 23.26. Well, if that were the case, we'd have a range expansion in the first hour. I always go back to what Paul Tudor Jones says when the market crashed back in '87. We noticed a dramatic increase in the range in the first hour of trading. It's the first clue that we had. Right? So we understood that there was nothing dramatic had changed in that first hour. Okay, so next we come into the day and we still have to figure out whether we're going to come back and revisit or not. So we kind of wait because we're not above prior day's high, we're not above prior day's low, and we got to figure out what's going on in here, right? So I want to go back to my actual chart, which is going to be spaghetti stringed up with all kinds of stuff in here. But when we open, I'm going to bring that over here, right? We open, that's not the chart I'm looking for. There's the chart I'm looking for. We opened up into my white zone, okay? My white zone has buyers in control, should have said above, sellers below. So if you'll notice, we open up and we rotate down. The very next question on my mind is, do we have the ability to hit the gap fill, close gap, or get half gap? Well, you can see we had half gap. And then, do you see this? This is getting a little technical maybe for some of y'all, right? But it's really important because this is understanding price action. See how we had this tick low here and the body of this candle could not close below the prior two candles, right? In other words, this was the heaviest selling pressure from the broader market, but we could not get any pressure to the downside from the S&P 500. It means the broader market sold. The S&P 500 said, haha, we don't care what you do. We're not interested in selling. And immediately responsive buyers came back in. This one candle gave us a ton of information. So we now know half gap held. We weren't able to fill the gap. We've gapped up. We were trading above London low. And now we're trading above London high. And, right, importantly, we're nowhere close to prior day's low. So guys, you got to slow down for a second. Take a breath. Take a breath with me. The market's not bearish here, right? No matter what you think about the ideas you brought into the day, this is price action. And price action is king. And it tells you that unless I get below this open gap, below it, there is no way for sellers to be in control, which immediately puts me to what? Look for buyers to be in control. We immediately push up and break the first 5-minute high and close, and then we consolidate sideways, and then what do? We come back for a 50 retrace right here. And if you'll notice, when we retraced on that 50 retrace, sell pressure did not increase, right? Here's the sell pressure did not increase. We then come back, revisit the high. Notice, all of a sudden, higher highs, higher lows, right? I want to point this out because it's so important for people who got run over short. We opened up. We did not fill the gap. We held half gap. We created a new high, and then we created a higher low, right? Immediately, when I see this, I'm thinking, I don't know about anyone else, oh, and NASDAQ was on fire, as a side note, right? I'm thinking, market's going up, right? And then notice, none of these bars are able to close above this 23.43, which makes sense. Why? This white zone was well placed, folks. This white zone told me buyers are in control above, sellers below. So guess what? See these two bars that I have marked off right here? This is the first bar that was able to close above all these other bars, and then we get this green bar right here. Two green bars back to back. We close above the white zone. The market's off to the races, right? So immediately I know, right? If this is the white zone, we've just consolidated for an hour. I do not want to be shorting here, right? Did the zone do its job, right? They were stacked on top of each other. Did the zone do its job? It did. We hit for 5, 10, 15, 20. This area held the market, but there was no short sign. Not only that, there's no bar that's able, no 5-minute bar is able to even test below the prior 5-minute bar almost through this entire move up, right? Buyers are in control. Now, here's what people want to happen, right? They want continuity in ES. Emotionally, they want that continuity. Like, well, it went down yesterday. We've got to retest the lows. Somewhere in that book, people kind of put that logic together. That is false logic. It is not true. We do not have to retest lows. We can mirror shape. And as a matter of fact, if you'll look, right, if we'll look at the chart on ES, we'll just pull up a fresh chart. Let's go to a big time frame. And let's go to ES. Okay, I want to show you something. Zoom this chart in. Now, just like kids, right? We can follow this. moves down, moves up, moves down, moves up, moves up, moves down, moves down, moves up, moves down, moves up, right? Moves down, moves up, moves down, moves up, moves down, moves up, moves all the way down, moves all the way up, moves down, moves up, moves down, moves up, moves down, moves up, moves all the way down, moves all the way up. So guess what? Okay, so I'm trying to make it a little bit like Sesame Street, guys, so that y'all get it, right? I want this to be simple. I want y'all to make money, right? We move down. We didn't break the low. Guess what happens? We move up, right? So tomorrow, right, just because we moved up today, does that mean that we can't move down tomorrow? Nope, sure doesn't, right? We could do this and then do this, right? Or we could do this and then do this. The market, it's an essential skill that you can read price action. There's no indicator that will tell you this. There's no soothsayer. There's no one who can look on a day-by-day basis and is going to be able to tell you successfully, other than we're making higher lows and higher highs, right? They cannot tell you successfully until the market is open the following day which way the market is trying to go. That is the skill set, right? That is the skill set as a day trader. And there's almost no place else in life where, except I guess imagine a doctor or a police officer, right? You can, as an emergency room doctor, you can plan out your day all you want, right? But at the end of the day, you got to wait till the patient arrives, see what the symptoms are, and treat it. So when the patient arrives, ES, tomorrow, you're going to have to be able to make an active diagnosis, be accurate with that diagnosis, be able to manage the risk, have the nerves and the mental stability and the framework to put on the trade, right? And then know where to take that trade off as well. That's a lot of skills that are going on at one time, right? And it explains why so many people, it explains why the guys that are good at it make so much money, and it explains why the guys who are not good at it lose so much money, right? So, that being said, let's finish out the day here, right? And then we'll let everyone have a good night. It's been 17 minutes, and that's enough to help everybody out. I know my videos aren't like everyone else's because everyone else's tell you, hey, it's easy. What's the problem, right? And I'm here to tell you it's simply not easy, and that is the problem, right? You got to know what you're doing. That's why you need a mentor. I don't care if it's me or you can pick whoever you want to be your mentor, right? Find a mentor to help you get through this. This is hard. Doesn't matter what you've been successful at before. This is harder probably than anything else you've ever tried in your life. Unless you're an Army Ranger or a Navy SEAL, there's very little that compares to the live decision-making process you have to make that goes on in trading. So the next thing I want everyone to note, right? Notice this is the original pitch, right? But this becomes the new angle of attack. You don't want to short when the angle of attack looks like this, right? Now, this is a double open gap, and I noted in the pre-market meeting that I am not overly eager to short the gaps, and I also wrote in the notes in the prior evening, note, above this point, the market has been very easily traded through. And then go look at what the market actually does, right? That's it's a big deal to know that, right? Because that let me know as soon as we got to this 23.49, the 23.57 was pretty achievable, and I even thought 59.61, which was my extreme upside target, was achievable. And then you'll notice we finally exhausted, right? You'll notice we had the biggest downtick of the day occurred at 1:10 p.m. And then we just went into a balanced market the rest of the afternoon is what we did. And then we had some profit taken at the end of the day, which, by the way, is totally healthy, right? So looking at tomorrow, it's options expiration. You know how I'll figure out what's going on tomorrow? I'll watch, and I already know what my support resistance zones are. I've been working on the zone. I'll give everyone a quick sneak peek. That's kind of what the zones look like for tomorrow. We're very poorly auctioned, by the way, from 23.50 down to 23.42. And I've already sent that out to the members, right? And so I know that we could slip pretty easily between 23.50 and 23.42, but I probably want to look to be a responsive buyer near 23.42 if everything sets up, right? Again, based on the price action that the market's presenting me with, right? And these are still my upside targets, and really it's reasonable if we have another strong day tomorrow to even check up on either 2367, which I expect responsive sellers first time in, and then 2370, and then if we really stretch, 2378, but that's doubtful, right? The average range, today was an exception, the average range has been somewhere between 10 and 15 points lately, and 10 and 15 points puts us up to 62, which is just beyond this area, and then 67. So I expect this to kind of cap us unless we have an exceptional day or an exceptionally strong gap up in the morning. But again, hear me. I want everyone to really, really be clear on this. It's options expiration. Anything can happen. Anything can happen because you don't know what all those options positions are and who's busted and who's not busted. So at the end of the night, guys, I would suggest I have a post-open checklist and a pre-open checklist, right? Anyone who would like that, email me. I'll send you what it is. I'm constantly updating it and improving it. You can reach me at tradeandperform@gmail.com or hit me on Twitter or StockTwits. If you'd like to come in the room and kind of get an idea of what we do in the room every day, you can be my guest for free, 5 days. Again, email me at tradeandperform@gmail.com. If you want to be a better trader and you need a mentor, contact me. We'll see if we match up personality-wise, right? But whether it's me or someone else, I ask you, the failure rate on day trading the S&P 500 or in any futures, okay, the failure rate, this doesn't come from me. This is from Dr. Steenbarger. This is from Denise Schul from Mind Market Games, Andrew Menaker. The failure rate is well over 70%, okay? Now, you can either be delusional and go, no, that's not true, or I'm going to beat the odds, or you can do something that's going to separate yourself from the average, and the average loses, right? So I would encourage you to reach out to a mentor to get the best mentor you possibly can, someone that matches both your temperament and your ability to bear risk and can guide you through the difficult parts. It's money well spent. I have no shame about advising people to do that because I think it's smart. I think it will help you get over those hurdles and make lots of money. The promise is there, the ability is there, but the reality is the initial process is hard, and you have to learn the nuance so you can pick these trades off, recognize early what the pattern is and how you're going to make money. So anyways, my name is Simon. I'm happy to answer anyone's question. Email me anytime, tradeandperform@gmail.com. Have fun. This is a cool business. It's neat, but just like everything else, playing in the NFL is cool too. You got to practice, and you got to know what you're looking for. Have a great night, everyone. Team members, I will see y'all in the morning. Everything's already posted. Talk to y'all later.